Hey, I'm Jusko from ProblemMoney.com. In this video, we are going to talk about the best cards for bad credit with an emphasis on unsecured credit cards, although we will also talk about secured credit cards and why they may be right for some people, depending on how bad your credit is and whether you're getting turned down for some of the other cards that we talk about. Now, there's no set definition for what bad credit means. Every lender is going to have sort of their own standard as to what they consider bad credit. I'm going to use 600 as sort of the watermark here for bad credit. If you're 600 or below, we're going to consider you bad credit. Some lenders might say 620 and below. Some lenders might say 580 and below is bad credit, but 600 is a nice round number, and we're pretty much all in the same ballpark. If you're close to 600, that is not the same sort of bad credit as someone who is maybe at 450. So what we're going to do in this video is talk about credit cards in sort of a stepped fashion, meaning we're going to start with sort of people that are on that higher end of the bad credit zone. Maybe you're a little closer to that 600. Talk about the cards that you might start with to try and see if you could qualify for, and then we'll kind of just go down in tiers where if you can't qualify for this, maybe you can qualify for this, can't qualify for that, maybe you can qualify for this, and then we'll also talk about when the time might come that you should start looking at secured credit cards instead of unsecured. Now, when we talk about those tiers that I just mentioned, at the top, if you're sitting at around 600, maybe a little over, maybe a little under, what you're going to want to do is see if you can get in with one of the major credit card companies first, and the two that I'm thinking of are Capital One and Discover. Capital One is probably where I would start. If you go into Google and you put credit cards for bad credit, you'll see an ad from Capital One talking about the fact that they have cards that maybe you could be pre-approved for, and they are targeting people who have bad credit. So obviously they are approving some people in this range. So if you go to Capital One and you can use their pre-approval tool that is on their website, the Capital One Platinum card is a card that people often will sort of start with on a rebuild if their credit isn't too bad. There is the Quicksilver One card, and potentially maybe you could qualify for some other cards from Capital One as well. But they are probably the most likely of what I would consider the major credit card issuers to let you in with that lower credit score, with that bad credit if you're sort of borderline. And then the other one is Discover. They are always worth a try. Again, if you are in that place where you're kind of close to 600, a little over or a little under, Discover is another place where you could go. They also have a pre-approval tool. It does not necessarily mean that you are going to get approved when you use a pre-qualification or a pre-approval tool, but in most cases you will. If they are offering you a credit card through one of those pre-qualification tools, you're probably going to get approved unless there's something new and bad on your credit report. Now, if you can't get approved from Capital One or Discover, probably the next tier down, the next place I would recommend you go is one of these two smaller banks that I think are a little bit better than some of the other sort of bad credit options out there, and those are Mission Lane and Merrick Bank. Mission Lane, sort of a newer entrant. They've probably been around about 5 years now as I make this video, but they specialize in working with customers that have had past credit problems. That doesn't necessarily mean you're going to get great terms and conditions. You may have no annual fee, but it's also possible that the card they offer you could have an annual fee. Your interest rates probably aren't going to be great, but they do have sort of a path to a credit limit increase if you don't like the credit limit that they give you right off the bat. And then they also have a pre-qualification form on their website where they basically say that if you use that pre-qualification form, they are going to tell you whether you're going to be approved or declined without a hit to your credit score. So if you're going to be declined, you won't get a hit to your credit score. If you're going to be approved, that's when they would do that hard pull on your credit, and then it would ding you slightly, but then you of course would be getting the card. And then Merrick Bank, another option in this same sphere. They've been around for a while. They are a bank that they're not a whole lot different than a lot of others, but they have some cards that people are normally feel a little bit better about that, I guess, than some of the other brands out there. And they have the double your line feature on their cards, where after a certain point they will double your credit limit, assuming that you've been doing everything right with your credit card. So again, you could get different sort of features from Merrick Bank depending on your credit history. Could be no annual fee, but it could be an annual fee. And then of course the interest rates could vary, and then the types of credit limits that you might get also would be based on your credit history. Now, if you've gotten this far and you're still not approved, the next tier down, in my estimation, is where you would look at companies like Avant credit card, the Mercury credit card, possibly the Prosper credit card. If by chance through the mail you get a solicitation for the Synchrony Preferred MasterCard, this is something that maybe you would look at as well. That is one that has that you get by invitation only, so you can't just go and apply for it. So I think any of those are cards that could be okay, but again, you have to be very on top of those terms and conditions and see exactly what they're offering you, because depending on your credit score, they could give you pretty decent terms, but if it's not very good, you could find out that you have a big annual fee, super high interest rate, and not much of a credit limit. But I tend to think of those companies as maybe a little bit of a tier above these sort of bottom feeders that we'll get to in a little bit. Now, so far we have been talking about bank credit cards, but another place that you might look with that lower credit score is in the retail store credit card market. Now, the sort of mainstream personal finance media loves to tell horror stories about store credit cards, and it is true that they have terrible interest rates, but if you are trying to get unsecured credit, it is a place where oftentimes they are more lenient and more accepting of people with lower credit scores. And as long as you pay off your balances every month, you don't end up paying any interest, so it doesn't matter what those interest rates are. And usually these are going to be cards that don't have any annual fee. So the sort of downside to the store credit card space is that some of these are going to be sort of narrow, because they are going to be cards that are either only useful at one particular store chain, or if you're lucky, you'll qualify for a Visa or MasterCard version of these cards, and then maybe you can use them more widely. But you could look at things like the Amazon store card, because Amazon obviously sells pretty much everything. You could look at the Best Buy credit cards, and then you could look at things like Macy's or Home Depot, and maybe Gap, Banana Republic, those types of credit cards. Sometimes those are just a way to get your foot in the door, get yourself a little bit of a credit limit, and start building that credit score back up. And then the next tier down are companies that have been around for a while, and some people do use them to build credit, and it's not that there's anything necessarily wrong with them, it's only that it's going to be expensive. You're probably going to have small credit limits, you're going to have high interest, and so you're really going to have to work to sort of build your credit with these kind of cards. And so this is a tier where we talk about companies like Credit One, and Credit One does have a lot of different types of credit cards, but when it comes to bad credit, this is kind of the area that they play in. There's Concora Credit, which is a company that has a few different credit cards under its umbrella, those being the Indigo MasterCard, the Destiny MasterCard, the Milestone credit card. Those are all sort of variations on a theme with a different name. And then you have Continental Finance, which is the same sort of thing. They have the Surge credit card, Reflex, Fit, Cerulean, and all kinds of different ones. But oftentimes all they are doing is just marketing the essentially the same offer under different names. So what these credit cards are going to do is sometimes they're going to offer you $200 or $300 as a credit limit, but they might have a $75 annual fee that is going to come out of that credit limit right off the bat. So as soon as you get the card, you already owe the annual fee, and you don't have a whole lot of credit limit to work with, usually high interest rates. So you have to make sure that you pay off that credit card in full every time that you get your bill each month. But you can build credit with these. They are going to report to the major credit reporting bureaus, so it's not like they are a scam or anything like that. But it is easy to go wrong with these cards, where you end up hitting your credit limit and actually maybe even hurting your credit a little bit in the short term because your credit limits are so small, or you just spend an awful lot of money to try to get yourself unsecured credit, where maybe if you haven't been able to get approved with any of the companies we've already talked about, maybe you should be going for a secured credit card to build credit instead. I want to talk about secured credit cards right now because they oftentimes are a better option than some of the companies I've already talked about, because you can get yourself in the door with one of the major credit card companies oftentimes through a secured card, and hopefully over time you can be graduated to an unsecured card. So if you don't know how secured credit cards work, you have to put down a security deposit in the same way that you would for an apartment, for example. You put down a certain amount, usually $200, $300 will get you a secured card. You might want to put down a little bit more if you can, because usually your credit limit is going to be the same as the amount of the security deposit. Now, that security deposit does not pay your bill each month. It is there as a safety for the bank in case you don't pay your bill. But when you are trying to build credit, you put down that security deposit, they give you the credit card, you use it just like any other credit card, you pay your bills each month, they report to the major credit reporting bureaus, and as long as you're making your payments on time, works just like any other credit card, and it can help you build your credit. Now, that money you have put aside as a security deposit will come back to you when you either no longer want the card or you're graduated to an unsecured card. The nice thing about secured credit cards is there are a lot of them from major credit card companies where if you use the card correctly, make your payments on time, all of those good things, well, they will give you that security deposit back, and now you will have a credit card from a major bank. So when it comes to secured cards, the Discover Secured card in particular is one I always suggest, not only because it's a decent card and it gets you in with one of the major credit card issuers, but also because it has a reputation for graduating you fairly quickly if you are making on-time payments. Oftentimes within sort of a 6 to 8 month period, you may be upgraded to the regular Discover card, given your security deposit back, and now you have a no annual fee credit card. Navy Federal Credit Union is another place where you have a secured card that has a pretty good reputation for graduating you quickly if you qualify to be a member of that credit union. But there are also secured cards from Bank of America, US Bank, and Capital One, and Citibank. All of those are options too. Probably Bank of America is one that seems like it's a little bit better about graduating quickly than some of the others I just mentioned, but any of those have a secured card that could be a way for you to build credit and hopefully graduate to one of their better cards. So probably for anyone with bad credit, I would suggest that you look at the cards in sort of the order of operations that I just gave them to you in terms of those different tiers. But depending on your history, you might already know how you stand with some of these credit card companies. So maybe you're going to start a little bit lower if your credit score is a lot lower. But sometimes people don't know where they stand, and so they think they have to go for cards that are much worse than the credit score they have. Maybe they're sitting around a 600 and they end up going with something like First Premier when they could have maybe gotten a better card, or maybe you kind of end up wasting a lot of time when you have a super low credit score when you probably should just start with a secured card instead. But if I were to give you a recommendation without necessarily knowing exactly where you fit, that is sort of the order of operations I would go, the tiers that I would go down in the bad credit card space.